Hello, guys. Welcome back to the FTS Digital Days. Today, I'm super proud to be with someone that I really admire. She's a superstar in her country and very modest, which is a rare quality, to find together in a human being. So the theme of today is financial inclusion, and I really don't see anyone better to sort of kick off the discussion than Omobola Johnson. Her curriculum is so full of events and different roles that I'd rather ask her to introduce her herself, and I will do it in a second. I'm just saying that Omobola is a rare combination of like uh, engagement in government and business, and now is sort of a giving back, all her wisdom accumulated in these years of work. And that's why I think that having a broad discussion on what does it mean to deepen in the financial sector is great with her. Omabola, welcome to the show.
Thanks, Matteo. Great to be here and good to see you
So
again.
yeah, indeed, it's been a while. So why don't you tell us in a couple of minutes your story so people can get to know you a little bit more.
Sure, sure. So I started my career as the management consultant in Accenture. I'm sure many of you know Accenture. I was there for 25 years, a very long time. I know for many people in this day and age. Spent 5 years as the country managing director. And then I took an early retirement, and it was while I was in that early retirement, just doing my own stuff, doing some freelance consulting, I was asked to come and join the government of President Goodluck Jonathan. And I joined as a cabinet minister, and I was very fortunate to be given the portfolio of information and communication technology. New portfolio, never had this ministry before in Nigeria. And so it was almost like a blank sheet of paper to do what we needed to do to get Nigeria on the map as far as ICT was concerned. So I did that for 4 years, and I think that's where I caught the bug for venture capital, because that's where we started, trying to raise a fund for very promising Nigerian entrepreneurs. And towards the end of that, I met Maurizio Chow, who is the founder of Telcom Capital, and I joined Telcom Capital shortly after my 4 year stint in government. So now my day job is as a VC. We have a fund that is focused entirely on Africa. Telcom Capital is about 20 years old. They were doing Europe and Israel before, investing in companies in Europe and Israel, and now we're just investing in Nigeria out of a $70 million fund. We've got about 8 companies in the portfolio, and it's a lot of fun. It's a lot of hard work, but it's also a lot of fun just seeing these companies grow and thrive.
As you could see, guys, Mobola has this blends, of that is somehow difficult to reconcile, right? Of working in government and in business, and now you sort of the last part of your career in is probably like the fastest pace sort of environment, right? Because we both share this passion for venture capital. So now let's, and again, imagine that, most of our auditors would sort of listen to this sort of topic for the first time. Why, in your view, and Nigeria, for the very few people who might not know, is one of the certainly highest potential growth country in Africa, right? Couple of 100 million people, decent infrastructure, but nowhere near at the level that is required to actually empower all these 200 million, which is, I know, is one of the topic that you love to talk about. But talk us a little bit about what are the challenges and the opportunities of, I would use the expression deepening the financial sector, rather than financial inclusion, which is maybe a little bit old-fashioned, I want to say, type of way of say things. Deepening the financial sector, meaning giving access to more people to a digital financial set of services that basically improve their lives.
Yeah, yeah. So, Matteo, the biggest opportunity that we have is the fact that we have, like you said, 200 million people. It's a very young population, so a high number of them are economically active, not all in the formal sector, but in the informal sector. And because they're economically active, they are earning some kind of income, and so they need some form of financial services. The biggest opportunity we have related to that is our mobile penetration. Nigeria has, I'm not, it's probably about 80 or so percent, between 6 and 70% mobile penetration. And what that means is that we can provide these financial services on the mobile phone, the fintechs, as you see that, as you hear them now. So instead of having to go to a bank, to a branch, you can actually do all your service, all your financial services on a mobile phone. That's a big opportunity, and that's a big opportunity for. I know you told me not to speak about financial inclusion, but that's a big opportunity to give people access to financial services because they need them, whether it is to transfer money or to borrow money or to save money, or to invest money, whatever it is, they all need these services. Now, that's the biggest opportunity. The biggest challenge that we have is around, yes, we have this mobile penetration, but in terms of the speed of that, the speed of the connections that we have, when you're in Lagos, Port Harcourt, Abuja, the sort of three key financial or commercial centers, speed is fine, the connectivity is fine. You've got a good 4G network and coverage around most of that part of the country. But when you start going to places where they're not financially included or not included in the digital economy, it becomes a little bit challenged. And so the big challenge that we have is infrastructure, is getting fiber or satellite, whatever it is, getting that connectivity to the rural areas so that people that do have mobile phones will get connectivity on a 4G signal and can actually access these financial services. Now, you will argue that yes, they can do this on a 2G or a USSD a channel, which doesn't need a 4G signal. And that is true because a lot of mobile banking is done on this USSD channel. But the truth is that we need to get more services to more people. We need to have this internet connectivity. And that's a big challenge. It's expensive because of right of way and all of that. I'm remembering all my days as minister now when I was fighting for right of way that made sense for the telcos and the infrastructure companies to roll out that fiber. But also, there's also a story that I like to tell, which I heard when I was on the board of Liquid Telecom, about how we get connectivity in Africa. When we're sending signals from, if you're trying to get onto the internet if you're accessing data from Portugal, from America, from wherever it is, basically we're having to circumvent literally go around the whole of the world to get a signal to Nigeria because we just don't have that cable. We don't have enough of the cable termination in Africa, and we don't have enough of it actually from the shores into the inland territories of Africa. So for instance, in Nigeria, we've got cable landing in Lagos, but trying to get that connectivity all the way to the north, to the north of the country, it really is very expensive. So we need to get undersea cable that is coming from Lagos, from the top of the from the top of the continent, from the bottom of the continent, and getting all that connectivity coming inside the continent and making it actually much cheaper and easier for people to access the internet.
Yeah, this is indeed infrastructure is by far the biggest challenge, not in terms, especially for the rural areas, right, of the country, which is I don't have the numbers, but there are countries like Mozambique, for example, where over 80% of the population doesn't live in the cities, right? And which is why we have this opportunity to use, in Europe, we would call it fintech, over there, we would call it mobile financial services, which are by far, the fastest and more affordable and more like a user-friendly way to get to people. Now, as an investor, Omobola, you see entrepreneurs, African entrepreneurs, try to hit these challenges in Nigeria, but you invest across Africa, right? So, what are on one side, the low-hanging fruits? So either the technologies or the type of businesses that these entrepreneurs are tackling first, and where do you see today the greatest opportunity of investment, and where technology can help to sort of to get this the financial inclusion sort of barrier lower?
In Nigeria, probably most of Africa, the way the arrowhead to financial services, particularly mobile financial services, has been lending. And it's the sort of, I would call it nano lending, where you're lending $10, $20, sometimes $5 for 30 days, 60 days, 90 days. And that's because a lot of the population, as I said, they are economically active. They have no access to loans because they don't have bank accounts. And even if they did have bank accounts, the banks require all kinds of, you have to jump through hoops to get this money. So that's the arrowhead that we see. It's many of these sort of nano lending companies that will lend you money based on them scraping data on your social media interaction, your your airtime purchases, and using that as a basis to develop a credit score for you. And so that's where we've seen the arrowhead to financial services is for inclusion. The second thing that we see is around what is called in this part of the world is agent banking, where basically a fintech will acquire or onboard agents, and the agents tend to be, people that have small retail stores across the country, whether you're selling recharge cards or you're selling small groceries on the side. You're an agent to these companies, and you are able to do sort of simple cash in, cash out transfers for people that require these services. They can pay their bills. So that's really where we see, and that's a great way for inclusion, because people need the loans, so they will come, and then once they get on these platforms, they become known digitally, because they will be, they're registered, they do some very minimal KYC, but they become known digitally. If it's on the other side, which is an agent or an agent where you're doing transfers or whatever, you become known digitally. And it's through these two arrowheads that we're seeing a great increase in the inclusion, in the digital inclusion. So I would say those are the two arrowheads that we see right now. And it's really coming from the innovation of these fintech companies. Innovation around, I can lend somebody $10 and know that I can get that $10 back because I've done, use technology, artificial intelligence, data mining to create a credit score. And the more they borrow, the more transactions they have online, the more that I can see how credit worthy they are. And this is working quite well. And there's a collateral benefit, because it means that small SMEs that wouldn't get money from banks are able to now get money to support their businesses. And people that are really living on the edge, that are very vulnerable, can actually borrow a little bit of money to tie them through difficult times. Of course, there's got to be some responsibility, because I know that there's pushback around people just borrowing, these serial borrowers. But I think it's a good thing. And of course, like I said, on the agent side, just introducing those services of cash in, cash out transfers. And finally, Mauricio, to say, Matteo, sorry, to say that what this does is that it actually enables, it begins to create the culture of being able to transact online. So somebody that really needs to borrow money understands or learns how to transact online. A lot of the time when they do borrow from these mobile financial services lenders, they get a bank account created for them, so they become even more included in the economy. So it becomes a way of which actually, first of all, getting people to learn and to be comfortable transacting online, but also getting them to have more formal bank accounts, which is a good thing for financial inclusion as well.
And let's talk a little bit about something that our auditors will relate immediately. When in Europe and also in the rest of the world, when you think of fintech, you immediately think of all these like the digital banks, right? The Revolut, the Number 26, the TransferWise, and actually thinking of something similar, given the 50 something countries of Africa, there are at least 30 to 35 different currencies, most of them backed by the dollar, if not all of them. And of course, having like a digital wallet able to sort of convert directly in the wallet the different currencies, being able to transfer money between the user of the same wallet, interoperable across Africa, seems to be like an El Dorado, almost like the impossible dream for most of the African users. And this is where I believe one of the greatest challenge of the continent, actually not only of Africa, but of other emerging markets, were actually being able to uniformize, all the different ecosystem hit against an harmonization of regulation, which is super complicated. How far we are, in your opinion, to actually reach to something similar, which of course will sort of lift many of the challenges of the country. That is the fact that the typical example, right? So if you're in Kenya, like buying tea from Uganda, or maybe it's the other way around. actually don't remember who buys tea from whom, but it's actually more expensive than importing it from China because of the currency challenges, or like the heaviness of the trade documents and stuff like that.
It is, look, I think we're quite far from it. Like you said, if even if you forget that, all, with the exception of, I think, the Francophone West African countries, every country has its own currency. So that's a huge, there's a huge diversity there. But beyond that, and I think that's really where I would say the biggest challenge comes, is really around the regulation, particularly when you look at regulation of fintechs. Now, fintech is really quite new in the continent. So central banks are still trying to understand financial technology and regulate what they can or cannot do. In a sense, some of them are treating them like banks, which they're not. And so when you have this kind of very heavy regulation on fintechs around licenses, around what they can and cannot do, in a sense, it stifles innovation. And so if you have this across the different countries in the continent, every single central bank trying to regulate these fintechs, in a sense, we really don't understand them yet because they're innovating so quickly. And if you're trying to regulate before innovation, you can stifle that innovation. So there is a challenge there. And I think, for many entrepreneurs that we speak to, there's a frustration that we really like to move much faster than this. When we're not done with Nigeria, but there's a lot of similarity between Nigeria and many other countries in the continent. And we think that what we're doing in Nigeria can travel very easily to these countries, but it's so difficult because of the regulations. So I think that is, well, it's a challenge, but there's an opportunity for for central banks to come together and see how we can actually not just regulate fintech, but have regulation that actually supports innovation, supports growth, and supports the entry of these different fintechs into different markets. We're seeing it happen, and we're seeing, a number of fintechs. MFS just did the merger with Bionic, that's sort of South Africa and Kenya. We've seen Flutterwave in 13, 14 countries. We see Verve Interswitch in many countries. So it's happening, but it has to happen at a much bigger scale, and it's got to happen in a much more frictionless manner. So there's a lot of work for regulators to do. I take some comfort from what has happened with AFICTA, the trade agreements between African countries. I think if we can come together and do something that is so complex as supporting trade across or within Africa, I think we can come together and do something that supports the transactions, the financial transactions that will be overlaid upon that trade. Because if we have this interregional trade with it's the Africa, I struggle to remember it's a trade agreement between African countries. But with that trade agreement, you've got to have ways of paying each other. And so we've got to overlay on top of this trade agreement an easier way for these fintech companies to be able to operate in different countries around the continent in a frictionless manner. So there is a lot of work to do in that area. And central banks really need to come together and have regulation that is forward-thinking, that is progressive, and that doesn't stifle the innovation, and that is not the same as trying to regulate a bank.
The day that this will come, the continent will do literally leapfrogging in terms of, agility and easiness to do business. Okay, one last question that is actually related to the global crisis that we are living in, because we have actually the chance to listen to how like COVID-19 affected country like Nigeria that has a lot to lose, like many other countries. But specifically, how are you guys coping with the situation? You as an investor, how are you like helping sort of the startups and all the entrepreneurs to get over this? I believe this is the time less about investing in new things, but more helping the investment that you have. That's what we are doing right now in coping with the situation. So tell us a little bit about how COVID is affecting your own business and what like help has been put in place, and how do you see the situation? It must be challenging, right?
Yeah, it's been challenging for most of our portfolio companies. I mean, I'll take one of our portfolio companies, Kobo 360, which is a logistics company. So during the pandemic is still here, but during the lockdown in Nigeria, trucks couldn't move about. They couldn't travel, across states. The ports were more or less shut, so there wasn't much coming in. So, Kobo was fairly badly affected. But luckily, they were able to now, because of the essential services laws, they were able to actually still be able to transport essential services, food and pharmaceuticals. But what we've done with our portfolio companies is to offer bridge rounds, basically helping them, tide them through this for the next, I would say, 18 to 24 months. Bridge rounds they don't need to go out and raise money because we are here to support them together with a number of our co-investors. It gives them that comfort to just continue to, conserve their cash for sure, but also ensure that they have enough cash to get through this difficult time. So we've done that for most of our portfolio companies. But Matteo, I think what is more important is that what TLCom has shown is that, we're still open for business. We see quite a number of VCs that are not based in the continent saying that, look, we can't do anything now because we can't do physical due diligences, we can't travel to Africa, we can't invest. And so we're going to sort of stop our investments until 2021, or when we can actually come and do physical due diligences. But because we are based here, we have that advantage. We continue to say that we're open for business. We are still, contrary to what everybody thinks, we are still looking at new investments. We're still looking at new companies. We have done, virtual due diligence for some of the companies that we decided we wanted to take a closer look at, and that's very important because in this pandemic, yes, it looks as though Africa has not been as badly affected, whether it's in terms of the positive tests or the number of fatalities. It looks as though we will not be as badly affected, but economically we're badly affected because basically the lockdowns have really had a terrible impact on the formal economy. For countries that are resource dependent like us in Nigeria, the price of oil, the falling price of oil has affected us as an economy. And it's important to just signal that there is still capital available for good companies to tap into. And I think that's the role that TLCom is playing right now. We continue to support our existing portfolio companies. We are still looking for new investments, even in this time of the pandemic. And it really is very, very important. That's the role that we're playing. And that's why I think it's important for VCs to have people that are in country or in continent so that you can actually appreciate better the pains that the companies are going through, appreciate their context better, and be there to step in when other people are actually leaving. So that's really what we're doing for our portfolio companies.
This is actually great. It's great to hear. And, in moments like this, collaboration is even more fundamental. So, and I'm pretty sure that I know that some of the funds I am collaborating with, they are actually really helping each other because when travel is complicated to do, even if, this digital leapfrog has become business as usual, for many of us, the fact of being able to partner even in some of the local due diligence is important as well. But it is actually great that that you guys are chasing for good deals and supporting the existing ones. Omobola, thank you so much. Our time is up. Omobola and I know each other for a bit more than a year. And we met during an amazing project with the Bill and Melinda Gates Foundation, and since then, we've been catching up, not often enough, but it is always great to get insights from your experience, Omobola. Thank you so much.
Thank you, Matteo. It's always good to speak to you. Thanks very much.
Guys, that was our FTS Digital Days on financial inclusion. Stay with us. We're going to have another appointment later in the day with a great panel led by Lazzaro Campos. Thank you so much and stay tuned. Thank you, Omobola.